Hi and welcome to today's Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to go through the dollar as the greenback continues to fall. So we were expecting a little bit of buying pressure going into this week just because price had retested this key supporting zone. We're expecting a pullback before seeing that continuation to the downside, but that hasn't happened. Price literally went 2 days bullish and has now continued to the downside, creating that dollar weakness, or seeing that dollar weakness continue. We are still at a major swing level, so if we look at that weekly time frame, we are at a huge zone where the market has reacted from numerous times in the past. We are oversold at this instance, so we do need to see some kind of buying coming into this market in order to start being buyers of the dollar again. But for now it looks like the dollar weakness is going to continue and that we could potentially see that going further on down the line. So what we can see is, and this is why I always talk about looking at that 4-hour trend, we can see the 4-hour trend nearly changed cycle. But it really struggled, so the market came back down. We had this nice little move through here. What we were expecting was the market to continue to be bullish, pull back, retest this zone, and then move to the downside again. But instead, the market kind of failed at these previous highs and has continued to push lower. So what we can anticipate is if this market takes out this next structure low here on the dollar index, then we can look for further shorting opportunities on the dollar in line with the overall trend. Now, seasonal reports is saying, we should be looking to buy the US dollar, and the strength and weakness table is suggesting that the market is very oversold, and we know that. But until the market actually changes and gives us any confirmed direction change on the technicals, we can't continue to look for those dollar buys. We have to look to sell the dollar, and euro is really benefiting off the back of it at the moment. Price rallying to the upside once again. I think a lot of sellers would be in the market currently at the moment. Now, when we spoke about euro, we said we wanted to see that 4-hour trend break. The only way we'd look to short it is if the market broke these lows, which it hasn't. So using those technicals has allowed us to stay out of this market. The market has rallied now to the upside, and what we can look for is the break and retest of those structure highs instead. So what we could anticipate is the market coming up into these highs, breaking out, pulling back, and then continuing to move to the upside if that dollar weakness continues. The same thing with sort of pound here. Market's just failing to make any lower lows on the 4-hour time frame. Price continues to the upside. Very similar to here on Aussie. Kiwi obviously is one that we're in. This did create the lower low. So unfortunately for us, it's tagged us in the markets, just continue to move to the upside. But essentially what we would expect is we've got quite a wide stop on this. So if the dollar strength does start creeping in at some point, then Kiwi would be affected. We're still looking to sell the New Zealand dollar against stronger currencies. But we're just waiting for that dollar to really start finding a little bit of support, whether it will down here, or we may even get a new low form and a retest of maybe the $92 area would be interesting to take note of. But essentially, dollar's continuing to fall, stay on the back of that short-term dollar weakness until we do get any kind of confirmed changes in cycle. Thanks for watching. Speak to you soon.